Okay, hello traders, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, October 3rd. Mike Boutros with you on the horn. Eman, Pete, Peter, Pooja, good morning to you guys. Great seeing you in the room. Hope all is perfect with you. Thanks, Eman. Yeah, so we are heading into the first week. Man, this has been quite a week to start the month, to start the quarter. The dollar reversals at initial support, okay, it's the former high day close that we're sitting at 98.96. You're heading into non-farm payrolls tomorrow. We'll go over the numbers there and what we're expecting. On the menu from the setup side, we'll take a look at euro, sterling, dollar CAD updates from earlier in the week. From last night, Swissy, dollar yen. Gold still holding that resistance level that we talked about last night. Pete, I see you in the room. SPX, I threw that chart on there for you. Man, it blew through all the targets, but the levels and the slope actually look pretty good still. So we'll take a look at that. And that's what's on my end. I don't know if there's anyone in the room trading Aussie or Kiwi. I've kind of strayed away from both of those. I don't have them on the list today, but if anyone wants to take a look, let me know. And also wanted to add crude there real quick as well. All right, any other questions or trade setups? As always, feel free to throw them on the message board. Here's what we look like going into non-farm payrolls tomorrow. So the expected print is 148,000. We got 130 the previous month. Unemployment expected to hold at 3.7%. Keep your eye on the labor force participation rate. That popped higher last time to 63.2. We're expected to see a hold at that same level. So obviously labor force participation, as that expands, will tend to put artificial upward pressure on the unemployment rate. And the same thing on the other end. So something to be mindful in as we head into the numbers. Obviously, the markets have also been moving on, this China trade talks nonsense and this impeachment nonsense. All that's going to continue to filter in. But from a trading standpoint, doesn't get much clearer from where we are in the broader picture. Here's DXY on the daily, or on the weekly rather. So you guys know this slope, man. We've been going over this chart so many times. Still failure. Okay, I want to open this up a little bit to show you what it looks like. The slope has been insane. So this is the dominant parallel right here. On a closed basis, has been rock solid. We saw one blip here, and last week did close above that slope, right? Intra-week, though, a parallel of the same gradient has continued to cap the highs. And that's what we're seeing even into the start of this month. That's all to say, we haven't broken upslope resistance yet, okay? And the initial kickback that we were looking for is still the same scenario. Note that that momentum trigger we've been watching since last year, again, looked like it actually did give out, but no follow through, okay? So the onus is on the bulls to get a close above 99.43 into the close of the week. If tomorrow materializes with such a scenario, let's say dollar washes out to the downside, then rips into the close of the week, a close above 99.43 would change things for me. And again, that's just the actual open gap that we made back here in March, and the swing low that we made subsequent before the gap lower that we never filled. So this whole zone is big, but on a closed basis right now, the bottom end of that zone near 99.43 is kind of the focus. So you know what to look for heading into the close of the week. Here's what the DXY looks like on the close of the day. So today is going to mark the third day of consecutive losses. You got a nice reversal candle here outside, not outside, but into the open of the month. Again, slope is in play here. This is a different pitchfork that we've been following just off the lows from 2016, 2017, 2018. Upper parallel resistance. There's a slope or a gradient of the same slope. Still holding. Okay, still holding. Momentum, failure at 60, something I also wanted to know yesterday as we were turning or earlier in the week. It's exactly what you want to see in the event of a turn. Now, one other thing I'd note, and this is kind of anecdotal at this point, but just the last few months of how we've been starting DXY trade, right? Here's the open of August, big spike into a fresh yearly high, failure. And by the way, that failure was a meaningful failure of nearly 2%. Same thing into the start of September trade, big rip into a new fresh yearly high, failure of 1.5%. So here we are again, start of September, October trade, rip into a fresh yearly high, I mean, I'm not saying we're definitely gonna get a 1% drop, but even a 1% drop off that high would give you leeway to somewhere around the 98.50s, 98.60s level. So if history repeats itself, there's any type of recurring pattern here, again, we're at initial support. The onus is on the bulls to get this thing going. Here's what it looks like on the intraday chart. So the levels are the same from early in the week, right? Here's what we were looking at as this thing reversed off the upper parallel. Again, 9950 was the level that we were watching. We buckled right back below that into the weekly open. So as it stands, the market had set a pretty decent, sizable weekly opening range right above weekly open support. Here's the break. Okay. Now, technically, this does put us looking for a late week low, Thursday, Friday type of low to register. With non-farm payrolls on tap, this is the concern. We're just opening up the quarter, just opening up the month, and there's event risk on tap. Just lower from here. Okay, this is 98.94, the level that we're looking at right now. It's a 618 extension from the advance. Just lowers that parallel. So depending on where we are in time, you're looking at like 98.80s. Look for a reaction there. Look for reaction there. If this thing is going to puke out tomorrow and then rip face, meaning rally, that's sort of the zone where you'd look for exhaustion. Okay, a basic 38.2 of the entire advance gets you 98.73. So you can envision a scenario if it does wash out, that's sort of the danger zone. With the same respect, the pivot of that zone, if we were to break below, would really open up or validate a larger reversal, a larger scale reversal in the DXY. That's when we look to the daily chart here, getting us back below monthly open support from last month, which is 98.82. So the levels are like really clean. Okay. I'm more inclined to like the downside selling rallies, but heading into non-farm payrolls, guys, as you get into 98.73, 98.80, watch how this thing reacts. What else can I say about DXY here? Continuing claims just came out pretty much more or less in line with expectations. So nothing to write home about there. And obviously ADP yesterday, guys, in the morning came out at 135, was slightly softer than expected. More so than the fact that ADP missed as a precursor for tomorrow was the fact that we got a downward revision. So from 195,000 ADP employment jobs last month, got revised down from 195 to 157. So ADP, obviously being private sector employment, guys, the non-farm payroll being the more encompassing one, will be a lot more of a deeper look. But if you take that, variance in account, the risk is for a weaker print tomorrow, essentially. All right. Any questions on DXY or where we stand on the dollar heading into the final, or heading into the first major event risk, I should say, of the quarter of the month? Okay, that's number one. Here's euro. Similar situation. You guys have all seen this before as well. On the bottom side here, longer term slope in the euro, holding again on the intra-week stretches. A little bit more precarious here, in my opinion. Momentum is basically flatlining right at 40. You can argue that there's some divergence there, but the point being, really precarious on the weekly charts. This thing's really got to make some sort of assault on the near term if we start to move higher. Now, from where we are in time, from where we are on slope, this is a beautiful spot to find a more significant low. We just haven't gotten that confirmation yet. So you guys know we're working under that assumption. Obviously, the swing trades are doing pretty well in euro and yen, but the longer term, or the medium term, we're still waiting for confirmation of a more significant low being registered. Basically here's euro on the daily chart. Slight adjustment, but the levels, the slope is just ridiculous. So what you're looking at there is the 75% line. Okay, again, here's the weekly, no change. Here's the daily. This is the 75% line of the pitchfork from the yearly highs. So taking the January high into account and taking that June high into account. 75% line, a little bit of a graze there. perfect on the last two beats down here. And here's the reversal candle with recovery. Decent rebound, nice divergence, but we still haven't cleared any significant downslope resistance. And that's when things start to get more of a conviction reversal trade, right? You have some sort of reversal pattern near term, you're shifting the focus higher. End game, you still need 110.21, 110.22 to validate that a more significant high has been, or a more significant low has been registered rather. That's the 618 retracement of this near-term advance, just this near-term decline from last month's high. You have a 3-point resistance trigger from the June highs, which is in play, and that would necessitate a break back above the median line. So all things held constant, like this is your big like level to beat if we're going to move higher in euro. Near-term resistance, last month's open comes in at 109.90. 110.22 is going to be that 618 we need to clear. Daily support, 108.97. Okay, that's just where we opened the month. It's going to be monthly open support now. I mean, obviously, I don't want to see anything that low per se, but that's what would be the major support. If we did break, you'd be looking for a resumption for a move lower down towards 108. But those levels on the daily chart. Intraday looks like this. So you got a nice little break of downslope resistance on the intraday setup that we've been following since earlier in the week. Here's what it looked like. It had made a really nice weekly opening range right above support. 108.82 was going to be that 1618 extension of the decline off the highs, certainly a level that we were watching. And you know, on the Tuesday release, we said, look, this is a pretty nice weekly opening range. If we break the upper parallel, you're looking for 109.67. Again, last month's open, 108.90 and 110.22 being the major levels on the upside that we really need to clear. And the targets as far as the longs are concerned. So here's the break. Okay, you got the first target at 109.67. Cool, that's holding. You're seeing some divergence. Watch out. Okay, you registered a Thursday high, so the opening range break has given us a fruitful play, but you're heading to major event risk. So topside breach, 109.90, 110.22, look for a reaction there. If this thing pukes out, weekly open support right now is 109.42. I want to stay constructive above 109. Oops. Okay, last Friday's low, former slope resistance turned support. Just below that, the median line. Okay, and this is the same formation, guys. Nothing's changed. Look how clean this thing has continued to hold in euro. So this is like your first spot. Watch for a little bit of a kickback here. If you're holding longs, you might want to choke up those stops or at least bring in a trailer on it. Next upside targets, like I said, 109.90 and 110.22. One thing I was looking for on this, and I couldn't find it last night, I don't think we'll see anything here today either, is just some sort of guidance to the advance. So, I mean, something like this you could just have on there for reference. I don't like, you know, there hasn't been much formation along the median line. The 50 line or 25% line here didn't give you much of a bounce. So, you know, something that could help us as far as trying to ascertain gradient, timing, and slope. But don't work too aggressively with this, right? Just trying to show you that we're looking for signs of upslope support. Whenever you draw a new parallel like that, you kind of want the lower parallels to validate what your bearish or your bullish in this scenario invalidation level is. And that would be pretty similar, right? If we break below the lower parallel, we got 109 there. 109.05 is sort of our line in the sand. Questions? So obviously the swing side of things, Jamie's got 109.20 stop, right? That's just below this region right here. Again, beautiful spot. From a swing standpoint where our entry is, be a good spot to find some support if it does pull back. But finally getting some play here. Finally getting some play. And the dollar sell-off kind of, again, like I said, losing some steam here. But you do have event risk on tap tomorrow. We're just closing out the first full week of October trade. It's not even the first full week of October trade, but you get the picture. Stay nimble here. Stay nimble. If volatility follows through, we've already gotten one hell of a start of the month. I think we're going to get some more plays here. All right, so that's euro, number 2. Number 3 is pound. Here's what sterling looks like. Finally popping higher. Didn't quite make it to 120, 197, which was the 618. Here's what sterling has looked like since the start of the week. Very similar to euro, right? We made a weekly opening range, came right back through the weekly open on Tuesday. 23.43 was resistance. Need to break that upside to go. 121.96 key support. That was the 618 of the advance, lower parallel. The focus range was a break here. Obviously on sterling, you guys know if you follow the previous updates, which you can always find the daily and intraday and weekly charts on the previous update if it's not provided. Obviously, we've been a big fan of the breakout in sterling from the reversal that we got in late August, even before the September drop, which gave us a new low. But where we came off of late last month was huge, right? Big old reversal candle, right off slope resistance, failure to hold a 38 to 25 buckled. This was the first level. This was the second level. We turned just ahead of that 618, and now we're popping back through 23.44. What does that mean? Well, again, here's the intraday. So I'm still in favor of the same exact levels. Okay, I still think you look for 24.37 on the stretch here. It might be a little bit longer, and I say that just because the momentum has really been dulled. I mean, you're getting a breakout here today, but I would have wanted to see a stronger reaction. Let's just say that if it was going to be kind of a pop through 24.37. But that being said, I do have a 50 removed here, which just for the sake of clarity, but watch, oops, watch this ascent here. 24, let's call it 23.93 is the 50% retracement. The major target that I highlighted on Tuesday, still 24.37. And then this is the big guy, 125, upper slope, former slope or current operative parallel resistance, big region. So looking to stay constructive above 22.70 in sterling, topside levels. Again, soft target 23.93, but watch 24.30 and 25. These are huge. If this is going to hold, like I said, 22.70 is bullish inval for the immediate advance, but like weekly open supports 22.87. I don't even want to see it that low. Okay, I want to start to see some support somewhere in the range of 23 if this is going to hold for that stretch up near 25. Questions on sterling? Okay. Okay, should we even bother talking about dollar CAD? I don't know what the hell that thing is doing. So this thing got all radical on us for no reason. Massive breakdown, massive breakout. It's just a mess. So here's dollar CAD. This is what it looked like earlier in the week, right? We've been watching this 32.87 resistance zone forever. It's the 618 retracement of the decline. We probed through it earlier into the close of September. Into the start of this month, it actually looked like it converged right on the upper parallel. We started the week, we failed right there. Nice reversal candle, looked beautiful, shifted the focus lower, broke the weekly opening range, and then fizzled out real quick. Didn't even make it into the 132 handle before completely ripping face and moving higher. Now, okay, whether it's the, talks about the US Canada Mexico deal, or whether it's whatever the reasoning is, the breakthrough 32.87 invalidates the downtrend. That was our level that we were trading at earlier in the week. That's the level that changed our opinion. Now, having said that, it's now testing the high day close for last month. It's now testing the 75% line, 50% line, right? The 75% line here of the pitchfork. And there's nothing to do here, guys. If you're not already long, don't mess with dollar CAD. The juice just ain't there. How can I put this in a way that makes sense? Let me just see what this looks like real quick, by the way. Okay, I'm gonna tack that 100% on there, 33.80. But here, just some levels to keep in mind, okay? 33.55 is the 618 of the drop. That's the same range of the entire decline off the highs we made in May. And then 33.83, 33.82 would be the 100 off the low. So two equal legs would be. So two levels to look for is resistance, specifically because this lines up really nice with the actual highs that we made in September. Levels to look for in the upside, but again, if you're not already involved, do not end up chasing this. Do not end up chasing this. So I wish I had a little bit more of a conviction setup or an opportunity here. You know, all things held constant, put a pistol to my head, I'd be looking for exhaustion near 33.50, if not 33.80 on a stretch tomorrow. Don't forget, it's not double whammy Friday as far as employment data. Canada jobs employment actually comes out the following Friday. You know, sometimes they come out at the same time as NFPs. You get a really nice play. So this is going to be largely dictated by dollar price action, and specifically any type of headlines or news events that happen with regards to the trade deals. Looking higher, 33.55, 33.80, both levels of interest for exhaustion. Support on this, man. I mean, if we get a pullback, watch for a reaction here at 32.88 again. It is still the 618 of the dominant range. This range hasn't been broken yet. So I'd still look for that, but it's the opening range high for the week as well. Would be like your first spot. But you know, if we were, let me just take that question for a second. If we were to get a decent fade signal, let's say this thing rips into like 33.60s, right? And then fails and maybe even closes below 33.35. Let's say you get a move like that. You jump into that position, you tack on some retracements, and you gauge the way the levels down on the way, right? Right now, the dominant focus is higher. Before we start to look for what the target would be on the short side, you'd need to get some sort of conviction, you know, reversal, some sort of signal to take that range. Does that make sense? Okay. All right, so that's dollar CAD. A little bit of a upset there. I'm not really sure how we're going to attack this one, but we'll let this one simmer for a little bit. Swissy, another one that is just ripping. So obviously there's some news from the SNB. They're coming out a little bit more dovish, saying more easing is needed, even talking about more intervention. So look, the thing slammed Swissy, which had come off of really nice resistance. If you guys recall the previous update on Swiss, we were essentially, we had made the first bounce off that resistance level. Here's what it looked like back into the close of September. Really nice move here. You know, we kind of blasted through this again, went for a run at the high at 10016. That failed early in the week, which shifted our focus lower. Since then, we've made two more attempts. In fact, even after last night's update, we made another attempt. That median line held, and then we ripped right back and failed again at these highs. Look, I'm not going to be stubborn on this. I'm not going to try to art you guys either and tell you that I got in. I haven't been on this trade, but man, the whole focus is on the major resistance that we're coming off of in Swissy. And that's why I'm kind of like still wanting to see how this, you know, how this pans out here. So you have the former swing highs for the outside massive weekly reversal you posted here in June. The highs of that week are right at 10016. You have the 618 retracement of the entire 2019 range. That's 10016. Just a really good spot. Just a really good spot. So, you know, the risk is still if we close below 10016 for some sort of meltdown, some sort of pullback on this thing, and we're still flat out right in the middle of the yearly range. So all these calls for like radical, like, you know, 150 in dollar Swiss or 95. I just don't see the justification for either. This thing is still simply within the confines of the yearly range, and we're heading towards longer term downslope resistance. So there's still some room on both sides, my point. Swissy, again, on the daily chart, this is what we've been following, and certainly that breakout of the downtrend looked like it was a good spot to fail. Okay, this is the pitchfork we've been following off the yearly highs. Here's the initial reaction. We got the upper parallel, which looked great. Really nice reaction at channel support. Was kind of looking for failure again here. Didn't work. Here's the break, and here's the third daily attempt to push through 10016. You have NFPs on tap tomorrow, right? Another one where we have to hold our breath and stand back. If you get a spike, if you get a push taking you into the upper parallel, and specifically failure to close back below 10016, that in my mind would be a fade. I'd look to short that. I can't get excited, even if this is a breakout of the dominant downtrend. I can't get excited about buying, at 4-month, 5-month highs. Just not my cup of tea. Not my cup of tea. All right, so that's like where we are on Swissy. Here's the intraday chart. I have no way, I don't know if this slope is holding, if it's still in play. I'm broadly just looking to see how this thing reacts on every topside attempt to breach 10016 or just parity in general. It still could fail. It still could fail. I mean, I don't know if this fundamental announcement that they're going to be embarking on, intervention is really going to be something that's going to move the needle to break longer term trend. S&B has had crap luck with intervention. It hasn't really worked out for them so much in the past. So whatever. We'll let the talk be the talk. We'll let the price be the price. Right now, still testing resistance near 10016. Okay, questions, comments, concerns on Swissy. That's number 5, dollar yen. Let's get into the juicy stuff, shall we? I can't believe I'm saying that about dollar yen, but here we are. Secondary target was 106.78. First was 106.94. We got 106.94 just now. You're hitting slope. I love this. I think it looks pretty darn good at this point, but you're at support. Here's dollar Swiss first on the weekly chart. So obviously we've been following this near-term down channel or this descending channel off the yearly high. That looked like a messy break. We talked about it on Tuesday. Didn't really trust it. 108.42 is our line in the sand. Okay, a breakout there. You're looking for a rally right up into the yearly open, right up into the 618, 109.36, 109.68. The levels were really well defined. Well, thing reversed really sharply off the highs. Momentum still holding this resistance trigger on the weekly chart. If this thing closes back within this channel, the low week close for the year, which was a reversal week back here in August, gives us 106.24, and that's going to be your first major support threshold on the way down. So from a weekly standpoint, you simply failed that resistance, and momentum and price are holding below. Not out of the woods yet. Not out of the woods yet. Here's dollar yen on the daily chart. So you guys know, and I've been freakishly amazed for the last couple of weeks, this descending channel formation, this descending pitchfork has just been insane for dollar yen. Doesn't happen very often, but the levels were just extraordinary. Breach of the median line got us to rally into the upper parallel, and ever since then, it's been like a crap show, right? You don't know if this is a break. You haven't gotten the accelerated move. But one thing we did note was that the what is that? The 138, 150, 1.5% line. So another measured move. So these are all quadrants. Another 25% to here converged right in that 50 of the entire yearly range for dollar yen. We failed there, pulled back into the close of September, rallied again into the start of this month on the first day of October trade, which is when we shifted our focus aggressively lower, was the outside day reversal we posted off of that confluence region. So an outside day reversal shifted the focus lower, but what did we say? Still got to get through what? 106.78, 106.94. That's exactly where we're trading right now. It's a basic 38.2, the advance off the lows. It's the former swing low from June. The pivot, clear-cut pivot that we made on both sides for the breakdown in August and the breakthrough in September, all originated in this zone. Okay, so you got 20 some odd pips right now where you need to be cautious on dollar yen shorts. I still like it, but if it's going to find some sort of rebound, if it's going to rebound tomorrow on non-farm payrolls, this would be the spot. And with the same respect, a break close below 106.78 would put us right on course for the next leg lower in dollar yen. You're looking for slope at that point. 75% line comes in somewhere in the range of 106.40. The big level is going to be the 618, which converges on the low day close for the year, which converges on last month's open, all between 106 and 106.09. So just super clean levels, and you don't get this very often in dollar yen. Like I feel like I'm a broken record when I say that, but it really is, both from the medium term and from the longer term, the levels are just great. So dollar yen coming to support right ahead of non-farm payrolls. Look for a reaction in this 20 pip range between 106.78, 106.94. Weakness close below this is needed to get this thing going. What's near-term resistance? Here's the intraday chart, and here's what we've been following from last Tuesday, or this was Wednesday. So here's the breakdown, right? 107.45 was the break that we were looking for. Initial targets 109. 106.94, that already hit, and again 106.78. So we're heading right here into these lower parallel, right? You have some divergence in near-term momentum, price action with lower lows, the oscillator with slightly higher lows. Could see a little bit of recovery. Near-term resistance gets dropped down to the median line, just above those former swing highs, just above these former swing lows. Let's call it 107.30s. Bearish invalidation gets dropped to the weekly open. Not my favorite spot because of where we are in slope, but just an objective zone. If we make it back through the monthly or the weekly open rather, 107.95, that inherently would put another run at the highs sort of as the focus for dollar yen. So first things first, if you get some sort of recovery, look for median line resistance, look for 107.45. This is the ideal scenario, the ideal sweet spot if we do rally to fail. Bearish invalidation, unfortunately, has to be up here. If we're heading into non-farm payrolls, I'm not going to scratch that in. We're going to leave that a little bit further out. A downside break below 106.78, soft target at 106.46. Okay, that's the 50% of the advance. But then you're looking for this major zone down here. Whoops. Okay, like I said, 106.09, 106, maybe that 10 pip range right above the 106 handle. And that's my take on dollar yen. Any questions here? All things held constant, I mean, where we are in dollar yen, this could be a really nice, a more mature move. I mean, like I said, both in price and time, a lot of the things that are happening right now, uh, and that's how these moves happen, guys. They're very subtle. People think it's an intraday pullback, and they get all cute with it. Then all of a sudden, 2 weeks, 3 weeks later, you look back and be like, "Wow, that was the high, right? Or that was the low." Not necessarily saying that's where we are right now, but it certainly feels from a timing standpoint like it is a possibility that we'll see a little bit more of a mature move on a lot of these. All right. Should we talk some gold? That's number 6, dollar yen. Here's number 7, gold. So, I just shot a video yesterday for Daily FX. You know, they love them. There's just a marketing machine over there. And for the forecast that we write for gold and whatnot, here, I mean, it's great. The chart has already played out for the first target, and it's not even the first full week of the fourth quarter. So 1522, 1526, that was the level we've been talking about for months and months and months. Never got a close above it. In fact, every close halted right there. Saw the downside stretch, the initial downside stretch on an intra-week basis came into that slope confluence that we've been following or tracking down here and bounced. As I said early in the week, I'm not buying that that's the low. We still like gold on the long term higher, but the rejection of this major multi-year uptrend resistance level, in my mind, would have given you a little bit more than, you know, what, a 6% move, a 6.5% move. I thought you'd get something a little bit more aggressive. Long story short, we're neither here nor there. What I wanted to show you right now on this chart is the only thing that matters is still 1522, 1526 on a closed basis to mark resumption. Support still basically where we bottomed out. Yeah, that's exactly where support was. We're sitting right in the middle of that right now. So the focus range is 1526 into like 1460. It's that big, but that's from the weekly standpoint, that's where we are. Okay, so before everyone jumps on the bandwagon, starts hating on me because we got bearish on gold, or still wanting to be bullish on gold, whatever your case may be, just know right now we're mid-range. Here's gold on the daily chart. So downside break of the ascending channel formation that we've been following, okay, gave us the drop. Major key support was 1460, 1461. 1461 also ends up being the exact 100% extension of the decline. So two equal legs off the high, boom, 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 gives you 1461. A 618 off the August low gives you 1460. You know, these are my favorite Fibonacci confluences. They tend to be very fruitful. I've played them hundreds of times, and certainly on the initial rebound here, once it started breaking downslope resistance, which I'll show you in a moment, yeah, it showed the risk for a rally higher. Now we're struggling at 15. Key resistance is still 1522, 1526, unfortunately, even on the daily chart. But this is your first sort of bump zone here. Here's the intraday chart. 618 of the drop. Real clean, nothing fancy. Haven't quite tagged it yet, but that's still the focus zone of resistance as we head into NFPs. Here's what it looks like. Full circle for the weekly opening range. I don't count that as a weekly opening range crack because you've essentially seen no acceleration. Here's the opening range highs for the week. So this full reversal here takes you into the 618, 1506, just higher as that slope. Levels for tomorrow, if gold rallies, these are the levels you'd need to clear through to mark resumption. Even if we get to the upper parallel, how clean this formation is, I would still be weary. Look at what the lower parallel did. This pitchfork that we were following from last week, the lower parallel actually literally landed on that same 1460, 1461 zone. So when this rebound materialized, man, it was like a conviction long, right? 1496, didn't quite get 1506 yet. So watch this. Again, gunshot approach, guys. I would think this thing's going to make a stretch tomorrow. If it pulls back, okay, a pivot back below the weekly open, which is in that same zone, 1494, 1496, would have me looking for a quick retracement. So in that scenario, it's too early to do this, but just as a drill, you'd look for something like this with a new high that registered, whatever that new high is, and then maybe something like this where it converges on the median line. You look for a 50, you look for a 618 tag, and that would be sort of target for the pullback. But point being, gold is trading right in the middle of its recent range. It's still at risk for deeper losses while below, essentially while within this formation, essentially. So it depends how granular you want to get. I know we can get super tight on this, and if we start channeling this on the near term, it looks like, okay, well, Mike, what if we break this downside channel? Is that the go? Could be, okay, could be the play. What I don't like is where we are in time, okay? So all things held constant, say if we were holding in the US trade session and this thing cracks below this level, yeah, it might be actually decent shorts here to try to press it heading towards, you know, a 38.2 or a 50% retracement. But with non-farm payrolls on tap tomorrow, I'd be really, really hesitant to take that kind of an aggressive stance on this. So, Pooja, Iman, I know you guys are big gold traders. These are the levels I'd be looking at heading into tomorrow, but good time to be nimble. A good time to be nimble. Ideal scenario, you fade a spike or spikes higher, fails, and starts to pull back deeper. And then we could assess that pullback as far as where the downside approach maybe. Amen says, yes, I'm watching. Yeah, I'm watching with you, Amen. It is very precarious. I loved the breakout, but I'm not, much beyond 1506. I'm not really a big fan. So let's see if there ain't some more downside to go. I'm already long at 1497. Eman, what's your target on that? With the tiny position. Okay, stay nimble. I'm with you on that. 1507. Okay, so you're looking for a stretch into that 618. And as I just said, as per my ideal scenario, you'd get that. And maybe then some. But I don't expect it to last. Let's just say that. All right, that is number 7. Moving right along, here is SPX, number 8 from last night. And this thing, woo-wee, what a drop. So look, where do I start on this thing? Here's the daily chart. I don't really go over the daily chart too much with you guys. It's kind of messy. This is SPX. The slope we were working with, the median line was decent. The lateral levels have really been the tell. The main thing I want to just show you is this. I mean, this is the same slope, guys. If you go to the previous update on SPX, this is from the 24th, right? It's the same exact slope. It's the same exact slope. So we came, we tested, we saw, we broke. The May high at 29.59 was the onset of the decline. That was support. We bounced off this level. Once that level cracked, man, it was a one-way trade. Took out 29.47 in a hurry, took out 29.30, and that was the big level I had told you guys about. It's the 2018 high day close. It's the 618 retracement of the advance. And when that gave out, it was just, free for all. So we're trading 28.92 as resistance now. The same last level, which we cracked through already, is trying resistance. The big level I just wanted to highlight a little bit lower, now that we've gotten a conviction high in place, I think we would all agree, is the 618, and that converges just lower at 28.68. That's what this is. Here's the 120 minute. So remember, as we always say, the downside break of a descending formation typically can be your sharpest part of the decline, just like a breach of an ascending formation will typically be the sharpest part of the rally. Here it is, downside break. So look, we've got a couple of slopes in play here. This is the 75% line that you're looking at, nothing major. I don't want to get too fancy with it, but I just wanted to highlight that yesterday on the charts as sort of a level to watch for SPX support near term. Just lower though, I would love to see 28.68 tagged ahead of the close of the week. So if you get one more washout, my point being, if you're holding shorts, this is where you want to tone that down. If you're looking for exhaustion, a near-term recovery, this is where you'd want to see it, both in price and in time. That means heading into non-farm payrolls tomorrow. So if you get a spike low tomorrow, you get a drive lower in price, look for exhaustion there. Resistance is tough on this one because you're at levels not seen essentially for a couple of months out. Look, I would just keep an eye on this slope, still noting that major resistance is the same key level that we were talking about on the way down. That's 29.30. Okay, that high day close from last year, the 618, and that's still the range that's operable. We haven't cleared that range. Still has me focused near 29.30 as major resistance. Now, I know that's a ways away from where we are right now, but you have to have your levels mapped out. So first things first, let's say 29.08, near-term resistance, going to be that former slope. Ideal scenario, you jackknife lower first, get a tag of 28.68, and look for a deeper reaction there. Anything beyond this, if we do break, like the next soft target, guys, isn't until 28.26. So big problems, okay, for SPX if we get below that level. Also, one other thing that you might see here on the charts kind of interesting is this line right here is just a parallel, guys, of that pitchfork that we've been following off the highs. Extended off the low from September 10th. Some symmetry there, and gives us a time value as far as the lateral levels are concerned as well. So that's my take on SPX. Pete, does that help? Peter Green, I know both you guys trade pretty heavily on this. Peter says yes. Yeah, you got it, sir. Yeah, it helps a lot. You got it. Right on. The slope is dope. Let me tell you, this thing has been. I don't. Again, I tell you guys where my strengths are, my weaknesses are. Dollar yen and SPX on intraday. Over the course of my career, haven't necessarily always been my highlights, but man, recently, wow, wow, I'll take it. All right. I just want to take a quick look at crude. Anyone here involved in this? So you guys remember we were talking about on Tuesday? I think it might have been even Monday of last week. Um, I kind of just didn't like crude higher, despite the fact that this had ripped, and once we buckled right back below, we were heading back towards the weekly open. Long story short, guys, we're at big support in crude, and I think a pivot that we need to start paying attention to. 51.67, 52.29 is defined by the low week close, okay, that we made back in August. So that's the low week close. And then the 618 retracement of the entire late 2018, 2019 advance. You can see major pivots in price down there, major swing lows down there. We're in that region now. Now, the interesting part is that now we're coming up on a scenario where you've had so many consecutive days down, right? Today will be the 8th, if I'm not mistaken. Last time we saw that was down here. You had a stretch of even 10, 11 days down, okay? The bump was pitiful. My point being, I think the risk heading into the end of the week here is for some sort of capitulation or some sort of near-term exhaustion, but the rebound, man, it shouldn't be too stern. Okay, I'm expecting something like this, where you can get like a 3 or 4 day span where you're getting higher in price, but the bounce is pitiful. And that's because of a whole load of factors, not to mention, the geopolitical stuff that's going on. So look for a reaction here. If we close the session sub 51.67, you still just have to deal with 50.75. I have that as a soft target. That's the actual close low that you made in this pullback in January, but it was almost spot on the lows in June and that stretch low we made in August. So that'd be a soft target on the way down if we do break. But all things held constant, I'm looking to really aggressively see how the daily close materializes today in relation to this 51.67, 52.29 level. All right. I wish I had some slope. I mean, here's the intraday chart. It's ugly as hell. There's nothing, there's nothing here, in my humble opinion, that's like, hey, look at me, right? So it's a tough one. It's a tough one. Just know that you're heading into support. Just know that you're heading into support. It's broken up slope support. It's broken all kinds of stuff, but this is the first major key lateral level of support, just lower here in crude. Pooja says, looking for a bounce, but need some confirmation to act with NFPs tomorrow. I'm a bit reluctant to get into position today, crude. Yeah, I'm with you 100%. And Pooja, that's why I bring it up. There's nothing here pending for you to operate on now. But yes, heading into the time period that we're in, the first week of the quarter, the first week of the month, heading into non-farm payrolls, heading into support in price, look for a reaction down here. All right. Okay, any other questions or comments or setups you want to review? Feel free to throw them on the message board. Good luck tomorrow, guys, with non-farm payrolls. Again, the print is expected to be a little soft, okay? So don't trade it on account of whether it's soft or not. Trade it on account of how far off the deviation it is, or how off the expectation it is, which is 145 and change or something. And 148,000. And again, some of those deeper metrics in the labor force and participation rate will be of importance as well. With that, I will leave you. Have a great weekend, guys. We'll pick things up again on Monday for the free session this week, again on Daily FX, on Tuesday and Thursday, right back here on SB Trade Desk. Best of luck trading, guys. Have a great weekend. Cheers.